All right. Well, we've got some real exciting information. At Asset Preservation, we're a qualified intermediary. We specialize in facilitating 1031 exchanges. And so with that, we talk about the rules and the process. What I've got today is a real special guest here, Todd Kuhlmann, who's a CCIM. He's out of Texas. And what he is going to share with you is a tool that helps you if you're a real estate investor with lots of assets, if you're a real estate professional, on how to analyze it. But he's going to go through a tool that he has called TheAnalyst PRO. He's developed this resource, refined it over time. And in fact, he's an instructor for CCIM and shares this to commercial brokers nationwide and really provides it. So Todd, first of all, welcome to this, and appreciate you doing this podcast and recording here today.
Thank you, Scott. We really appreciate it. And just a shout out to you. I've been working with you, gosh, now 6 or 7 years. And really appreciate all you do, not only in promoting people in the industry, but also educating people. So teaching and getting the word out. I know you do a lot with the CCIM Institute too, and teaching some word classes. So shout out to you and thank you.
Todd, thanks a lot. Well, we know as people understand the process, they can put more deals together, whether they're a real estate professional or a broker. So with that, you've got some great expertise, developed some really interesting software. I'm going to kind of hand it on over to you to walk through what your software does and do a little demo and provide a resource to commercial real estate professionals, investors out there that they can use to evaluate properties. So Todd, I'm going to kind of kick it back over to you and take it away from here.
Perfect. Thanks, Scott. Just want to confirm that you can see my screen.
Looking good.
All right. Well, as Scott said, I started TheAnalyst PRO actually in 2011. So we're over 10 years old, and it's evolved greatly. It actually started as a mobile application and has grown to be a complete cloud-based platform that you can do different analysis and marketing from. We started out as a bunch of commercial real estate calculators on your iPhone device and have grown it. I'm going to show you in a very short period of time. We're only going to take about 10 minutes here and go through this. Grown it to be, you could replace your Argus with this. You could replace a lot of your OM and marketing material and expensive software that you may have now with this. I created this with my team. We've grown our team over the years and really evolved the platform based on feedback from people like you, other commercial real estate professionals in the industry. We like to call ourselves kind of an all-in-one solution with marketing, investment analysis, lease analysis. We've incorporated demographics, as well as what I call my location risk analysis. As a recovering 14-year lender in commercial real estate, one of the things that were really important for us was all that due diligence. Is it in a flood zone? And as you know, FEMA changes flood zones all the time. Is there any environmental hazards around that property? If you're working with Fannie Mae on an apartment complex, they may be interested in what the crime is in that area around that property. And we're the only platform, the commercial real estate platform, that is actually fully mobile. So you can run an analysis at your computer, at your desktop, and when you're running out the door to meet your client, if there's any changes, you want to change the price, redo the analysis, you can do that on the fly. You can pick your phone up because it's all cloud-based, grab and access anything that you've already entered, and then run that report again on your mobile device and shoot it out instantly to your client. Our financial analysis, I mentioned the word Argus. For those of you that kind of cringed when I said that word, don't cringe. We really did an Argus level underwriting within TheAnalyst PRO. We have things like rent roll, rollover risk analysis, whale and walt. We also have sensitivity analysis for acquisition price. What if I paid something less or more for that property? Disposition analysis. So we really go in detail, but my whole philosophy in creating TheAnalyst PRO was we want to make it simple for you, the end user, but put out the most output possible. So our vision has always been to keep this simple and easy to use. So you can do a very robust financial analysis on a property, literally within about 10 minutes. The same with lease analysis. If you're working lease properties, you can do a comparison between different leases and lease scenarios. We've integrated some wonderful demographics. I'm really big into visuals and graphics. So we have a lot of great detailed demographic information, but we also have incorporated some of our favorite infographic data that really kind of takes all those numbers on a page and puts them to a graph. And then, as I mentioned before, that location risk analysis where you could choose between flood, crime, environmental, and run a report literally in 10 minutes on your property to identify if it's in a flood zone, identify if there's any known environmental hazards around that property. Here's a sample report of an environmental report that shows any known environmental records within a quarter mile or a half mile of the property. Absolutely invaluable for doing commercial real estate. And I think even great for before you take that assignment or before you put that contract in on that property, you could run this report, identify any known records within that area, and then be able to do some due diligence on that as well. And we really take all of this, the investment and lease analysis, the demographics, the location risk, the aerial and annotation mapping, combine that with being fast and simple, and you could now create a full offering memorandum, or what I like to call a due diligence package. So our industry loves to call these things OMs, but I'm actually going to go to the level of saying you can put a whole due diligence package together on this property when you've got different things like these demographics and location risk analysis. And the beauty part, again, making that fast and simple, you can put a whole OM and due diligence package together. When I say a whole OM due diligence package, 30, 40, 50, 60 page package together in literally as little as 15 minutes, which is a complete game changer when it comes to being able to market a property, preparing for a listing presentation, those types of things. Normally, these OMs take hours, if not a couple of days, to put together. In our case, we're making it simple. We're doing a template base and being able to just drag and drop photos, drag and drop a description over there, copy and paste that description over there, and boom, start putting that together. We combine that. Once you create the OM, it's really easy for us to say, hey, we want a property website. So you can have a dedicated property website, flyers, brochures. So we've added a lot additional, what used to be all analytical, numbers and financial analysis tools. We've actually added a lot more on the marketing side as well and combined those two together. We have a whole training center. So as Scott mentioned, and as Scott is very passionate about training, does a lot of training classes. I'm the same way. I've been training commercial real estate internationally for many, many years now. And so we put a whole training center together in the Analyst Pro that you can access on-demand training. I've had people come back to me and say these trainings alone are worth the subscription to the Analyst Pro. And what we try to do is current relevant training as well. So just recently in the last month, I did a training session on the impact of inflation and rising interest rates in commercial real estate. And I took it more from an analytical standpoint and identified, okay, how do the supply and demand factors change this? How did the pressure on cap rates change what the cash flow of the properties are going to do? And so that's available in our training center as well. Now, one of the tools we have in the Analyst Pro, and we have over 20 tools in the Analyst Pro you can choose from. One of the tools we have in the Analyst Pro is our 1031 exchange tool, an exchange calculator tool. It's a very simple calculator that you can use. In fact, some of our more robust tools, such as the financial analysis and lease analysis and creating those OMs. But we have a lot of tools in here that are very simple mortgage calculators and 1031 exchange calculators. And I want to take just a minute today and show you how we can do a 1031 exchange calculation using the Analyst Pro. And I put together a sample little case study here. And it's just a Dollar General property, very, very simple property, where we come in and say, well, what's the purchase price? What's your original going in acquisition price and cost that we had buying the property? Let's say $980,000. How long are we going to own the property? 5 years. What can I sell that property for today? So back 5 years ago, I bought this and my all-in cost was $980,000. And now I'm looking at and say, well, I've got an offer today. I can sell this for $1,176,000. Plus, I'm going to have to pay some commissions and closing fees of 5%. Now, we're going to look at the depreciation of this property too, because as you know from taking Scott's courses, that depreciation changes now that basis in the property. That's what the IRS looks at on what tax you have to pay. So when we first bought this property, what was the allocation of the improvements for the property that we're going to depreciate, take cost recovery and depreciation on. So that we're going to say is 70% of the property's value was to the improvement value. So the calculator is now going to come in and say, well, we're going to take straight line cost recovery or straight line depreciation on that improvement value. And because this is a commercial property, we're going to say we're going to look at this over 39 years. Now, let me pop out of my PowerPoint presentation and go over to the Analyst Pro. This is our dashboard at the Analyst Pro. Down here, you'll see that training center I mentioned to you. Our most recent training was how inflation and rising interest rates will impact commercial real estate investment value. So definitely recommend checking that out. Even if you just set up the free trial, you can come in here, watch these training videos at basically no charge during your trial period. But we're constantly adding things to that. Up here, you'll see we have our different tools within the Analyst Pro, our analysis reports, including our lease analysis, our investment analysis, property reports, including that location risk analysis, and then our calculator tools. So our calculator tools, we have a mortgage calculator, cap rate, time value money calculator, IRR NPV calculator, and then finally our 1031 exchange calculator. I'm going to take this Dollar General property and put it into the 1031 exchange calculator, because what I want to show, Scott, is really how simple this is, because I think this is the game changer between us and a lot of other tools. It's just how simple we can come in and create a report that they can then share with their client, explain. I think just as important as creating is being able to explain it as well. So I'm going to come in and just call this the Dollar General property. And I'm going to save this in a folder I already created called the Asset Preservation folder. Press on Create My 1031 Exchange Analysis. Now, my original acquisition cost, this would be my purchase price plus acquisition cost. That was my $980,000. That was 5 years ago when I originally purchased this property. This is a Dollar General property, so I'm going to consider it under the IRS classification as a commercial property versus, let's say, a apartment complex, even a duplex or a rental house would be considered under residential. So this is commercial. The difference here is basically this is going to be a 39-year depreciation schedule versus the 27.5-year. If we had capital improvements that we put into the property since we purchased it, that's going to change our basis in the property. But I'm going to say, make this simple. We didn't have any capital improvements that we put into the property. Sales price. If I sold the property today, I could sell it for $1,176,000. Whoops, not 11 million. Boy, that'd be nice. 1,176,000. And I'm just going to say it's going to take a 5% cost of sale. How many years did we own that? Well, we've now owned that property for 5 years. So you can see you can come in and show the ownership of the property all the way through the entire lifespan of that property. We went to 40 years. The reason we went to 40 years is because anything over 40 years or older is not going to change the calculation because you fully depreciated this commercial property. So even if I've owned a property for 100 years, this calculation could be accurate and the same. If you had a state capital gain tax rate, you could put that state rate in here. Our default rates are over here in the default settings that you could enter for the federal tax rate, the cost recovery recapture rate, as well as that percentage of improvement. So we've defaulted those for you. You can overwrite those defaults, but we just want to make this as fast and simple as possible. That's it. So I basically had the acquisition information I entered, the disposition information I entered. I hit on that generate report, and then it's going to generate for me now a one-page report that I can explain and show to my clients. Coming in here, just kind of give you an overview. We had our initial acquisition cost, how long we've owned the property type, so we know the useful life of that property. The improvement value. So this calculation was done by taking our acquisition basis in the property, the $980,000, and allocating that basis now to the improvements versus the land. So this is what we're taking depreciation on the property. Our tax rates that we're using to do the calculation here. Then we come down and we calculate the adjusted basis of the property for the 5 years we've owned the property. So over the 5 years we've owned the property, we've taken depreciation of $86,000 on that improvement value. So it's reduced our basis in the property to $893,000. Coming over here and looking at the gain on the property, we have our sales price minus our cost of sale. We then subtract out our adjusted basis on the property, which we calculated over here, to give us now our total gain on this property of $223,000. If I subtract out now the cost recovery we've taken, because cost recovery recapture is at a 25% tax rate and capital gain from appreciation is at a 20% tax rate. So when we split those out, you can see the different amounts that we're going to now take taxes on. Looking at our sales proceeds before tax, we have a $1,117,200 sales proceeds before tax. But looking at the after-tax proceeds, we pay our federal capital gains tax, our cost recovery recapture tax gives us our sales proceeds after tax of $1,068,000. The difference, and again, keeping this simple, between the before tax and the after tax is now what we can defer by doing a 1031 exchange with asset preservation. We can now defer $49,061 in this particular exchange. Now think about that. That's a pretty good chunk of a down payment going into the next property they're looking to purchase. So now you're able to go actually purchase a larger property by not paying tax today on that $49,000. If you think, boy, I could leverage that 4 times the amount or even 5 times the amount, you're looking at a pretty significant $200,000-$300,000 larger property now that I could go purchase by just simply engaging asset preservation and doing this exchange. Now, last thing I want to show, Scott, is I want to show how easy this is also if on my mobile device and I'm picking up my iPhone and I'm headed out to show a property on my iPhone. So what I'm going to do is I'm actually going to set up where I'm sharing my iPhone screen to my iPad. So let me see if I can get this screen monitoring to work. I had, of course, technology. I had everything set up before. All right, here we go. Let me drag my iPhone over here. So this is my actual iPhone. You can see me going and scrolling up and down on this thing. I use a little program, Scott, called the screen sharing program is actually by a company called Squirrels called Reflector. And I use this thing all the time because I love projecting my mobile device onto my computer. Well, here's one thing. I can, number one, go down here and I can look at the recent reports that I've run. And you can see down here, I've run that Dollar General report. I can pull up this PDF report that I just generated. And now I can immediately email this out, print it, upload it to my Dropbox and those types of things. But if I wanted to, I could also come in and adjust this on my mobile device and say, okay, let's go into that 1031 exchange. I had saved this under my Dollar General. If I want to make any changes to this, now I can make a change. What was my sales price? Maybe I'm going to sell it for more or less, and I can come in and change this. So, well, all right, they offered me $1,150,000 instead of $1,076,000. How does that change my report? So I can just come in here like this, rerun that report and see now, how is that going to change my bottom line on the taxes that I'll defer by this exchange? So another really cool, tool in your tool belt, if, as I like to say, to come in. Let me move my phone out of the way and wrap this up, as I want to show you my very last slide. My last slide basically is our cost. So the Analyst Pro is $599.99 a year. That includes unlimited reports and all the information, all of the offering memorandums, everything. It's based on an individual subscriber license. But I did want to offer, Scott, so thanks to you setting this up and our long-term relationship that we've had, I wanted to set up with you a free light version that includes this 1031 exchange calculator at no charge. And then also, I want to offer a 7-day free trial if they want to try that full version, and then 20% off the annual subscription if they end up deciding to move forward, all because their association and affiliation with you. We do have a landing page for this that they can go and immediately sign up. It's just theanalystpro.com/1031. That, my friend, is your landing page. Or they could email us sales@theanalystpro.com. but you need to say you heard about us through asset preservation, and we'll get you signed up on this special offer. Again, free light version, that 1031 exchange calculator is included in that. A 7-day trial on the full thing, and then 20% off the price, the annual price. So thank you, Scott.
Fantastic. Man, Todd, I'm impressed. That is a lot of information in a short period of time. What an effective tool. It looks very from, I've seen previous demos, but just seeing it again here as a refresher, just to see how user-friendly it is. It's a wonderful tool. So I'll just repeat the URL there, theanalystpro.com/1031. If you want to pick this up, I can see if you're a real estate professional, this could be a real powerful tool. And if you're an investor with a lot of different assets, it gives you kind of a neat way to analyze your assets, look at whether you want to dispose of them, continue to hold. So Todd, thanks so much for spending some time visiting together here. It's been really great doing this. I'm going to wrap this up, and thank you. I'll leave that as the last slide there.
Perfect. Thank you, Scott. Thanks for setting this up, and thanks.